Stop. What do you see? Do you see a house? Well, I hope so. But there's also a lot more you should be seeing if you're a real estate investor, and we're going to talk about that in this video right here. So let's bring up the real estate tax planning toolbox right away, and we are going to dig right on into this thing, and we're getting down into level 2 and level 3, investment strategy and real estate investing. The specific strategy we're going to be pulling out is the cost segregation study, and we're going to look at what you should be looking for and why it's a tool you can definitely use. If the numbers make sense, you just need to know how to be thinking about it and looking ahead for it. We're going to keep this pretty high level, but what do you need to know about a cost segregation study as a real estate investor? You need to know that it is going to save you on taxes. That's the whole thing. You're going to pay some money to have a cost segregation study done if it's going to save you enough through depreciation on taxes. Now, that is that first bullet point here. And by save, of course, with taxes, we mean defer. You defer taxes down the line, but this can be huge dollars. We've already previously mentioned the cost benefit of what you're going to get out of it in tax savings versus what you're going to pay to have the study done is 90% of what you need to figure out ahead of time to know if you need to proceed ahead with this strategy. The last thing we're throwing down in yellow here, we're not going to talk about it specifically in this video or in detail, but you need to be able to make this an active activity, and as a real estate investor, that's going to be through real estate professional status. That's how you're going to be able to take the losses you can deduct or generate through depreciation and deduct them against your income. What we want to do is take a look at a couple examples here to outline how a cost segregation study works, what you should be looking for, and ultimately what's happening and what drives the value for you. Through this process, we're going to look at a scenario where it doesn't make sense really to do a cost segregation study, and we're going to look at one where it definitely starts to make sense to think about it. So in this first one, we're looking at a residential property. We're going to bring up some numbers here. Now let's say you buy this house for $4 million. You're able to separate that out into 25% land. You get, in this case, $100,000 is land, $300,000 is the building. And that's just how you typically start when you buy a property. Now, when you do a cost segregation study, what can happen is shown on the right. We started the beginning of this video asking, what did you see when you walked into this property? Well, what did I see? I see some new floors. I see some office furniture we walked by walking in. I see some kitchen improvements that were just made, some new stuff in there that looks like we may be able to take and place some of the value of this house into those items, ultimately allowing us to accelerate some of the depreciation. This, of course, would be done through an actual cost segregation study, what you would pay to have an engineer or somebody that would actually do the study to come in and evaluate this for you. In this case, we get $5,000 for the kitchen improvements, $2,000 for the office furniture, $20,000 for the new floors. And the key behind all this is that by identifying these items, you get to accelerate the depreciation. You are pushing them into a category for depreciation that allows you to depreciate them quicker and give you more upfront tax benefits. Again, this is the name of the game. This is what you are doing. This is the game you are playing if you're proceeding forth with a cost segregation study. Now the screen we bring up here, this is focusing more on the actual calculation of it all. So what's happening behind the scenes? What did this cost segregation study yield you? At the end of the day, we accelerated what is let me do some math right in front of you here, $27,000 of expenses we can depreciate over 5 years instead of 27.5 for the building. That reduces our $300,000 to $273,000 for the building, and now we can take that 27 and accelerate depreciation on it. You can see the math here down below. What it ultimately results in is $1,000 upfront tax savings we can get. As your advisor, and as any advisor you should work with would hopefully recommend to you, this will not be worth it in this case to proceed forth with the cost segregation study. The benefit you're going to receive is not going to be worth it. It would in no way benefit you to do it with the outlay of cost you would have to even get the study done. But what you can start to see are the components and how they line up, and really the pieces you have to be minding to know whether a segregation study is worth proceeding forth. This is how you have to start lining up. This is how you have to think about it. This is how you're going to walk through it with your advisor. But what do we know about you, hotshot? You're a big-time investor. You're not just looking at residential property, you also invest in commercial property, and that's what we're walking through right now. Take a look at this guy. We're walking through, we're looking. This looks pretty nice, and we might buy it. And we have these new skills now. We're looking for the other elements we can be thinking about if we buy this property. How can we run a cost segregation study idea by an advisor we have and have them help us make the choice of whether this is worth proceeding? So again, let's bring up some numbers. We have a similar screen to what we looked at with the residential property. We're bringing up similar values. In this case, you can see we've split out the land and the building appropriately again. In this case, it's more of a 33% split on the land. We get $1 million in land value, $2 million in building value for the $3 million property that we've purchased and invested in. Great for you if you're going in on a deal like this for yourself. You're doing really well. A lot of people going on partnerships with these types of deals. When you get into commercial type stuff, Either way, the tax benefits present themselves and offer themselves up to the partners involved. So back to our example here, we go through the same process. We're going to use the same categories to keep it simple. So what does that result in for us this time? Our cost segregation study has yielded us $20,000 in kitchen improvements we saw, $30,000 in new office furniture that's been set up, and they had just had their floors redone for $200,000, the whole space. It looks bright, it looks beautiful, it looks great, and now it's going to help you get a tax benefit. So we come back to our calculation screen, we're running through the same numbers again. How does pushing some of this depreciation expense into 5-year property accelerate a tax deduction for us? And that's what we're looking at here. So in this case, you can see as the math results, we're using a 32% marginal tax bracket here. We're assuming you're a big dog now. Probably in those higher tax brackets if you're investing in commercial real estate. So what does the math bear out at the end of the day? In this case, you're getting a $14,000 additional tax savings from doing the cost segregation study. And this is where we get the green thumbs up. This is where an advisor might say, let's look at the pieces of this. Let's take a next step. Let's see if that tax value is really going to be worth it for you. Now at this point, we generally laid out the components. You can see what we're looking at. You can see why a cost segregation study could make sense, how it really works at the inside of it. Very general, very simple, but you're seeing how some of that can actually work. And certainly as those numbers increase, as the property values that you're buying increase, as the amounts you're able to push down into those faster depreciating categories increases, you can see how these benefits can go higher and higher and really turn out some value for you. Now, the last key point we're going to bring up in this particular video, we want to talk about what can be a secret weapon in the cost segregation strategy is bonus depreciation. Now, what does that mean? Essentially, we can take those amounts we've reclassified into different categories for depreciation, and we can take a lot more of that up front in the first year. And we're going to look at that here. In 2025, the bonus depreciation rate is 40%. It's been more generous the past few years. It's been steadily decreasing over the past few years. The bonus depreciation generally gets reset through new tax law. That's why it's good to have an advisor on your side to make sure they can anticipate these things for you, put you in the right spot so that these tax savings keep rolling in. But let's just take a look at the final math once more. That year one additional savings on that top end residential side here, you can see how it's gone up over $1,000, but we're still in a spot where that wouldn't even make sense for you. The cost of it is maybe at best you kind of come out flat, at worst you're losing money, it's not going to make sense. But on that commercial side, we've now pushed that tax savings in year one up to $30,000. That is never going to be anything to snuff at when it comes to taxes. That is really lowering your tax bill. And again, as you buy properties with more value and more higher numbers in them, these things can go up. That's how wealthy people stay wealthy, wealthy people get wealthy, and this is a very, very powerful way to facilitate that. Now, just to reiterate, bonus depreciation changes almost every year, at least for the past few years has. That's why keeping up with these things and having a little bit of knowledge yourself is always going to be valuable to know what you should even be looking out for. We're going to definitely be covering more on cost segregation studies because, as you can see, it can be a really powerful tax deferral tool. And when it makes sense in your strategy, most people don't like to pass on these opportunities if they know they're available. So we want to get educated, we want to learn, we want to know when to be looking out for them. And that's a lot of what we'll continue to cover as we go through these concepts, how to look out for when you need to be looking out for them almost. That puts you in the right spot to evaluate them and start getting these tax savings. Thanks for checking it out. We're going to have much more soon. Come back for tips, tricks, and advanced strategies. They're all going to help you save taxes and put you in the right spot for financial success. See you next time.